There is a number in yesterday's federal update that almost nobody's talking about. It's not the federal deficit number. No, it's not the fuel tax cut. Not at all. It is the number that indicate the amount of political power, or specifically the number of political room the current government has to come for your income. Yes, you heard it right. And the people who understand this and know this are using that power right away. And you, Henry, are going to be the one they're coming for. If you want to know more, you know what to do. Stick around. Ways is Rahim from Fine Print Canada. Calm finance, no hype. Choosing today's episode, which is critical, in my opinion, for most of the Henrys that might change your financial projection forever. So stick around and see what we have in store for you. Let's do it.
Three, two, one.
Today's episode, season 1, episode 14. The government just got a majority. This is what exactly is coming for your paycheck. Henry, most of you have no idea. You might be wondering it's a good thing. We're majority government. We finally will get things done. We finally will make some progress. Here's what you might not be aware of. They are coming in with a $65 billion deficit. Again, $65 billion deficit they have to overcome. And they got 2 years unobstructed to achieve that goal. And the one they decided to come after to close that gap, it's you, Henry, because you are right in that political room that they can use, changing a few policies to get the high taxes so they can overcome deficit and play the game that we all know. So, how will this affect you, Henry, if you are still listening and watching to this? Let's find out together. The four policy bombshell that will hit your wallet either this year or most definitely next year. What are they, Henry? Are you curious to know? Me too. Let's see. First one, investments. You might be wondering, what about my investments? I don't see any changes, correct? I don't hear any update about it. Okay, let's see. The two-third inclusion rate returns. This means if you're not aware of it, the more money you make in investments, it's get added up back as your income, not as capital tax exemption. So end up you paying more taxes to the government. That's what the first one is related to capital gain inclusion rate. Second, bracket creep, no indexing. This means as your income will go up because of inflation, obviously, correct? You need more money to buy the same purchasing power. Inflation basic concept. But here's the twist. As your money will go up, the bracket of income taxes will never raise. This means your 150K income faces silent bracket drag every year. And how will you feel it? You will feel in a way that is very obvious until it doesn't. You find a situation where you're making more money, but you're having less take home pay. The reason being this one related to income tax. Third, FHSA rule shift coming. As you might have remembered, FHSA came in to help middle class people or middle class income earners specifically get their first home. Correct? How are they changing that? Income tested clawbacks. Expected at 120K combined. Combined is important word. So if you make 60K, your spouse makes 60K, is combined 120K, no more FHSA eligibility for you, making it more harder to put your money down in a place for a future home. It is two, real estate. Fourth, co-op structure break crackdown. This means if you hold a specific corporation mainly for your investment to shelter from taxes, they're cracking down on them. This means they're reducing the limit you can put in there and reduction you can get. As a result, you'll have to pay more taxes even inside the corporation. As you must have guessed, it is to corp. So look at this, Henry, the four policy bombshell that will hit your wallet. And if you didn't knew it, now you know now how they're going to hit you, when they're going to hit you, and how impactful it will be when it finally happens. And remember, this is already happening retroactively, whether you like it or not. I'm going to present you some numbers and let's decode what they mean. Correct? Let's see what they are. 26K. Mean anything to you? Hmm, me neither. Let's see what they are. It's the extra tax for 100K capital gain under the new two-third inclusion rule we talked about. 8 to 22K lost per year if your corp specifically created to hold passive income because you're tightening the rules. $0 index relief. Ottawa is counting on you to not realize it that they have not indexed percentages as your income goes up to inflation. And what all these numbers have in common, if you might ask? The real cost to you annually, Henry's, specifically in Canada. When does it hit your paycheck? That's important, right? You want to know it's actually going to hit me so I can actually wake up and be aware of this, right? Fair question. Let's see. Budget day, estimated fall 2025. Capital gain, as I said, already in effect. You file now, pay more later. Tax season 2026. The very first return coming under these new rules. Your CPA, unfortunately, will be calling you with bad news. If you don't have one, I highly recommend getting one before it's too late and too much costly. Crop change is happening this year and next year. The holdco passive income threshold tightening. You're going to restructure that investment or wind it down. This might be the final year to do it before you are unable to without any heavy penalties. FHSA clawback. Surprise! Never saw that coming, I'm sure. Income test at 120K combined. Remember, crucial word combined, not individual, combined. Check eligibility now before it's too late and you're locked out of this. See how it got shattered? I'm sure all of your thoughts and dream for this year, specifically as you can see, summer is there, might have already been shattered. But don't worry, we won't leave our audience without an action plan. Let's find out together what the action plan is. We're going to ask specifically about this particular inclusion we talked about before the next budget. The result being a proactive 300 to $500 right now can save you close to 26K or above next year. Imagine return on investment on that alone. You're going to review your co-op structure, the second action plan. So if you have a corporation or holdco designed for investment, you better make sure you check the new threshold, review it, move it around before it's too late. So don't wait. Move this week after watching the video. This is the window to act before the changes take place next year and you can't do anything about it. So call your CPA this week. Make sure to ask them about capital gain inclusion. Two-third rate, remember? Review your co-op structure. Check your FSHA or FHSA eligibility now. The reason being, if you have a combined income 120K and you don't income test before it, you will be locked out before the opportunity is ever given to you. And as always, if you're liking the channel, make sure to follow our channel, Fine Pin Canada, where every week we decode what Ottawa is not telling you, high income earners. Like and subscribe, share the channel, let us grow, let's educate, let's make better decision Henrys, one Henry at a time. First, call your CPA. Second, review your co-op structure. Third, check your FHSA eligibility now. Welcome back to our closing. As we saw in our today's episode, the four policy bombshell that have just dropped and is coming for you guys, specifically Henry's. This is what happened exactly if you don't act right now. Year one, payroll taxes already up, income tax, aka the creep of bracket, already running. This means you're going to get hit faster and harder than you think. Year two, majority government coming in, they have a $65 billion deficit. Remember again, $65 billion deficit they have to cover up. So they will come in, be proactive about their policies. This is what will affect you right now. RSP room, gone. Your eligibility for FHSA before income tax, gone. Your ability to restructure at your current rate, gone. This means all the flexibility, all the rules, everything that you had to protect your investments is just gone and it's just going to become tighter and tighter. The news just dropped this week. People read headlines, nobody reads fine print, and that's where it always is very expensive, and it's always have been. If you like the channel, make sure like and subscribe, follow the channel, share it to others, specifically about today's episode, so they are aware of what is coming for them, whether they like it or not. Again, is Rahim from Fine Print Canada. Calm finance, no hype. See you next week again. Same time, same place. Have a good one.